Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
I'm not leaving. I'm not fucking leaving!
Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today we are going to talk a little bit about the Fed policy meeting yesterday. We're going to talk a little bit about that, interest rates. I want to talk briefly about inflation, although I'm mostly going to save that for the weekend's deep dive. Then I got a whole heap of Bitcoin stuff and some narrative and that kind of thing. And then, of course, we'll take a quick look at the charts. First of all, before we get into today's episode, an awful lot of people have been watching me line up this VIX trade, whereby my expectations are the VIX is going to trade somewhere down into this kind of two green horizontal line area, somewhere between, let's say, 8 and 12. And then I've been saying that, assuming I'm right about everything else, we are probably going to get a huge VIX explosion to new all-time highs. And I have been speculating that at the end of this decade, we'll probably look back at this VIX trade from the lows to all-time highs as being one of the trades of the decade alongside things like Nvidia. And lots of people have been asking me, how exactly do you trade the VIX? But I hope you can understand, okay, you need a certain type of account to get exposure to the VIX. And I don't want any kind of liability risk to say, this is the broker I use in case a bunch of people flood into that broker and it is to collapse. It's going to be bad enough if I lose my money, but the last thing I want is any kind of negative karma hanging over me from me recommending a certain brokerage or exchange in case the worst should happen. Another couple of factors that you need to consider as an individual, okay, are your type of experience, your understanding of risk management, the types of fees associated with different instruments, how adept you are at leveraged products, because many of these VIX products are leveraged by design. If you're going to use things like options or futures, then there's an entirely different kettle of fish there. You've got to account for things like expiries and decay and all of this kind of thing. And frankly, you know, there's no answer that I can give here to say, oh, use this broker and go and trade this instrument, because many of you won't even have access to the type of instruments that I trade because of where you live in the world, or because of the amount of account size you have and these kind of things. So I hope you can understand, I'm not deliberately, you know, I do what I can to help you, okay, but a certain amount of this has to be off your own back. If you're going to try to play the VIX, then you're going to have to spend some time Googling the different types of accounts that offer them and figure out which ones are for you, if any. And you certainly need to be super careful and aware of things like fees, because they can get very, very expensive on certain types of instruments. Risk on leveraged products, of course, is something that is absolutely not for beginners. And there are, of course, hundreds of different ways to do it. So I'm sorry I can't be more help, but hopefully that has cleared that up, because I've been getting these questions for weeks and weeks and weeks. The good news is you've got a good couple of weeks, I think, to go and figure this stuff out for yourself. And then hopefully in the next couple of weeks, if you decide that you are capable of taking that trade whilst managing risk and understanding all of the implied risks and volatility and everything else, like I said, fees, tax implications, all of that good stuff, if you are confident in your ability to do so, then of course you've got a couple of weeks to go and figure out how you're going to do that. Otherwise, okay, there's no necessary requirement to take this trade. Just because I'm taking it does not mean you should copy it, does not mean that you need to. And just because I am suggesting this is probably going to be one of the trades of the decade, doesn't mean I'm right, okay? I could easily be wrong about this. And if I am, you know, so what? I'll just come back here and go, well, I was wrong, okay? Who cares? So yeah, I'm sorry I can't really be more help, but hopefully that at least clears up why. I wanted to kick things off with something that I think is very, very important and very, very, very overlooked in this space, okay? Peter Brand has been trading since 1974. He's only had 5 losing years. His historical success is not due to his win rate. It is due to the fact that when he is wrong, he can quickly change his mind. And this is one of the key points I try to drive home as often as possible on this channel. It is not about being right or wrong. It's about staying on the right side of the trade. There is no value in I told you so's. There is no value in looking at some of these bigger accounts that have been right the entire bull run and then got on a couple of things wrong of late, and then suddenly everyone is calling them out as LARPs and fake traders and all the rest of it. It's an incredibly unforgiving space. And again, you know, if you think that being right or wrong is important, then I already know you don't make any money in markets, okay? That's just the absolute truth of it. So the sooner you can relinquish control, the sooner you can realize investors and traders get things wrong all the time, the sooner you'll be able to say, okay, well, there's my invalidation, time to flip the other way, okay? And that is a very, very, very overlooked skill. It's very, very important in this space. And frankly, given that social media kind of relies on the ability to say, I told you so, there's an inherent incentive as a YouTuber or a Twitter poster, whatever, a big kind of finfluencer type account, there's a massive, massive incentive here to get things right and then come back and point at them and say, look, I got this right. Because that's how you drive more people into your accounts. That's how you drive more subscriptions and followers and this kind of thing. You have to have a proven track record of being right. But remember, being right is good for growing followers and subscribers. It is not necessarily conducive to profits in the market. And that is a very, very important distinction. So please keep that in mind. And in case anyone's unaware, okay, I have been wrong plenty of times and I will be wrong plenty more times. But once more I say, it is not about being right or wrong, it is about staying on the right side of the trade. Of course, yesterday we saw a 25 basis point cut by the Fed. I still maintain this is too little too late, but maybe, again, I'll be wrong about that. We'll find out. The one thing that I'm very, very proud of the Camel Crew for understanding, okay, is purple tie means we pump, and blue tie means you should probably put some hedges on or go short the market. This is tried and tested. It works nearly all of the time. I'd say about 80% hit rate with this. And it's mostly a meme, okay? But some memes are based on truth. And this happens to be one of them. So I didn't watch the meeting. I don't care what this man says. I don't believe a word he says. I genuinely believe he is part of a controlled demolition and they're doing this whole thing on purpose. But one thing I do know is if I look at his tie and it's purple, then I can continue to remain long and strong with a high degree of confidence. Meanwhile, they are in the middle of cutting rates to save the economy, right? So the comedy just continues every which way we look. One thing that's going to be super interesting to me is the following week, the upcoming week, we've got CPI coming out. As of right now, the Trueflation data, as you can see, has us on 2.67%. So this has crept up massively. One thing that's super interesting about this, again, investors have a way of looking right beneath their noses at this number and saying, there you go, inflation's sticky, inflation's resuming to the upside, which, according to this number right here, yes, it is. But the devil is in the details as always, and these Trueflation prints, because they update daily, are around 1 month ahead of the US government reported CPI rate. The interesting thing about that is the upcoming CPI print that is due this week should be closer to reflecting the data that was seen around 1 month prior, which got as low as 1.01 or 1.02%. So I still expect, at least for the upcoming CPI print, to see a significant leg to the downside. And then, of course, the question becomes, is that the bottom of CPI? Is that a short-term bottom? Is this just a counter-trend wobble? Okay, do we get a plunge down in CPI, bounce back up? Everyone goes, okay, inflation's sticky, inflation is back, and then does it resolve to the downside? Or, and this for me is the biggest question, do we see this lower print manifest, meaning a sharp drop that no one's expecting, apart from the Camel Crew, and then do we get something break? Do we get the stock market break down from its third and final angles? Do we get a demand-destroying event? Do we get some kind of bear market and recession start to take hold? In which case, we will likely drag this number down as we start to see investors flee risk assets and enter the dollar as a short-term safety trade. So really, I don't want to spend any more time on this, okay? This is all just pretty much conjecture. For now, though, I am steadfast in my ideas that we are going to see the following CPI print in this upcoming week be significantly lower, and that all kind of would make perfect sense to me. But then going forward from there are going to be a lot of questions as to what happens to the inflation prints thereafter. Over in the world of Bitcoin, I've been really enjoying watching this Coinbase app ranking bot. We need only scroll back about a week and a half, maybe 2 weeks at the most, to find that Coinbase was all the way down at the 500 level and was down at about 33 in the finance app sector. And as of yesterday, it climbed all the way up to 110 from 500 and 11 from about 33. So that move happened an awful lot faster than I was expecting. Remember, historically speaking, getting this app into the top 5 consistently usually is a good indicator that we are close to the top. Will it work again this time around? I don't know, but it is certainly something I'm going to continue to track and monitor, particularly if we start to get blow off top angles develop, third angles break down, and that coincides with Coinbase hitting the top 5 apps or perhaps number 1, then maybe we could say, okay, that's a little piece of confluence. Last time I covered this on the channel, a lot of people said this is a boomer way to interpret the markets. Maybe it is, maybe I'm too old and dumb to understand that. In other news, BlackRock saw a massive 14,588 Bitcoin bought via the IBIT ETF, which is the largest inflow ever, right around that all-time high breakout, okay? Pretty crazy. And there is still plenty of narrative out there that is starting to develop that could potentially see this leg to the upside and this move of Bitcoin into price discovery start to really accelerate. The US government is about to put a 200,000 Bitcoin yearly buy order into the market. That would be valued at about 14 billion per year or 57.4 million of daily purchasing When we add this to MicroStrategy's daily purchase of about $20 million, you have a combined floor buy at any level price of $77.8 million per trading day coming into this space just between the US government and MicroStrategy's daily purchases, which is a floor price of $172,889 per mined Bitcoin. So it begs the question, doesn't it? What happens to the long tail on a truly finite $75,000 asset when the world knows just 2 players from one country will guarantee you a price of $173,000 a year for the next 5 years? And of course, after the next halving, that floor rises to $346,000 per coin, since we will cut the supply in half once more. And you can see here, this pertains to the US building a strategic reserve, a Bitcoin purchase program which shall purchase not more than 200,000 Bitcoins per year over a 5-year period for a total acquisition of 1 million Bitcoins. They're going to conduct these purchases in a transparent and strategic manner to minimize market disruption and hold the acquired Bitcoin under the section in the trust for the United States as provided in this section. So if any of this stuff starts to come to fruition, okay, you better believe the narrative is absolutely there to see a true euphoric blow off top, a fear-driven fifth wave, as people are scared not to own this asset. If you're wondering what this might look like translated to the charts, there's a really nice schematic here. You can see we have this accumulation down the bottom, okay, a quick markup followed by reaccumulation and trend continuation into a major reaccumulation, which we have just completed and are now trying to emerge out of, which would of course give us that final leg to the upside, before they start to distribute this thing and mark it down once more. And again, okay, I am noticing that people are underexposed to this move. Again, I am noticing there's a huge wall of worry to climb here, a huge mountain of doubt, with the majority of the comments that I see of people saying, I don't care about Bitcoin, no way it can do more than 85 or 90k. Most people don't believe it's ever going past 100k. And that is absolutely fascinating to me, because at the last cycle, for example, everyone was convinced we were going to 300k and we topped at 69k. And now we apparently have the complete opposite. We've now got everyone saying no way it can do more than 90 or 100, when fundamentally the things going on under the hood, okay, the things like the US government and MicroStrategy and BlackRock spotted Bitcoin ETF, all of that stuff, if anything, should be having people exceeding prior targets. But so far, hard to argue that this is not in play, and the only missing component is that final push to the upside, which again fits with everything I've been presenting on this channel for the past couple of years. The average return of Bitcoin in November is 43%, and we're currently only up 7%, so we got a long way to go. And if you're wondering what this might look like from an Elliott wave count, Big Mike has a potential answer for you, okay? We might well be in the middle of this 3, 4, and then looking for that 5th into the top, 150-ish K, maybe a bit more, would be about right for me. And that this would likely be occurring with the NASDAQ topping by the end of this year. You can see this is sort of mid-January, so any time in there would be fine for me as well. That would give us a NASDAQ of about 24,000. And if we get anywhere close to that and Bitcoin looks anything like this, then I am going to be more than comfortable calling major tops here. And you better believe it's going to be a highly unpopular thing to do, because most people are going to be sold on this whole US strategic government reserve narrative. Okay, up only forever, super cycle, all of that stuff. The last thing I wanted to touch on before we get to the charts, okay, is I keep seeing this, and I just wanted to point at this and suggest that maybe there's an alternative way of looking at it. Okay, so money market funds are currently at 6.6 trillion of sideline capital. And that's because currently they can just slurp about 4% return a year risk-free. And this number has been ever increasing, right? And now the consensus in the market is that this huge cash pile is currently slurping that 4% risk-free rate. But eventually, as they continue to cut rates, okay, they're going to be incentivized to take more risk. And this money is going to flow into the stock market, forcing asset prices to the moon. That is the consensus. But the reason I wanted to bring this up today is just to propose a slightly different way of looking at it. And that is, what if this sideline capital is actually the super rich, slowly but surely taking profits into the all-time highs as we experience this blow off top in the stock market and risk assets? What if they can see that a recession is around the corner? What if they are also concerned? The majority of the market thinks this bull market is early, and instead what we're seeing is people like Warren Buffett just slowly but surely build a huge cash pile. The fact that this continues to build up, and these investors are more than happy to have 6.6 trillion sat there collecting a risk-free 4% as opposed to chasing markets higher when the market cap to GDP ratio is at all-time highs and sat around 200%. What if, okay, what we're actually seeing is the smart money, the rich money, start to slowly but surely take profits and de-risk and accept a lower rate of return in exchange for taking less risk of huge drawdown via stock market collapses. So I don't see anyone else talking about this. I just see people looking at this sideline capital and saying this has to flow into stocks and Bitcoin. But I don't think it has to. I think if you're rich enough that you can have a huge chunk of money collecting 4% a year and you're happy with that 4% a year, then you probably know something that most of crypto Twitter doesn't. As for the stock market, you can see we are continuing to scream higher in a third and final blow off top angle. The Nasdaq is currently at all-time highs. Okay, happy days, long and strong. And the Dow Jones, same deal, long and strong. Russell 2K, that long from the lows. Okay, if we can get out somewhere close to the top, I think I'll be able to look back at this and say we did better than almost everybody else. Gold looks to me a lot like it is about to left translate and fail this daily cycle. That's probably it there. And I'll be looking for like left translation and failure down into that weekly cycle low time frame. So happy days there, all going according to plan. And Bitcoin, okay, going to continue to lock people out until eventually there are capitulation of buyers and they start to ape in at the top on leverage. And then of course we probably will get some kind of big shakeout. So if you're not subscribed, make sure you subscribe and follow along. If you're a level 3 member, look out for the members only video coming for you guys this weekend. But everyone else, I hope you're doing well in life. Deep dive tomorrow, so come back and check that out. And other than that, have a fantastic weekend. Until next time, cheers, bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key. Taking us normies